Good evening, guys. Good evening, good evening. You're welcome, you're welcome. Show you how the blissful weekend. If you can hear me loud and clear, please drop a comment. Also confirm you can see my screen. You're welcome, you're welcome, you're welcome, you're welcome. Sure you had a great weekend. You're welcome, you're welcome, you're welcome. Confirm you can hear me loud and clear. Good evening, good morning, good afternoon, depending on where you're connecting from. Confirm you can hear me loud and clear. You are welcome. Thanks for joining today's class. Thanks for joining. You're welcome. You're welcome. I'd like to know your plan, your trading plan for the week. I'd like to know what currency pairs you plan to trade this week. I'd also like to know your bias on those pairs. Please drop it in the comment section. What is your trading plan for the week? What pairs are you considering trading for the week? I'd like to know in the comment section. A trader who doesn't have a plan has already planned to fail. I want to believe you have created your plan for this week. You shouldn't start trading if you don't have a plan, if you haven't created a plan. And your plan should be created before the market opens. It is not when the market opens you start creating a plan. You should do that on weekends or at the end of the day. That is when you should create your plan for the week. Have you done that? Have you done that? Drop comment if you can hear me. Drop a comment if you can hear me. Drop a comment. What pair are you considering trading this week? I'd like to see your comments. If you can hear me loud and clear, I'd like to see your comments before I start the class. I want to be sure you can hear me loud and clear. Can you hear me? Can you hear me? Drop a comment if you can hear me. Drop a comment. Drop a comment. Okay, let's start the class. Let's start the class. Once again, I want to welcome you all to tonight's session. Today is 11th of May 2025. Okay, so as you know, we always start by looking at the news calendar. We start by looking at the calendar, okay? Start by looking at the news calendar. As you know, there are two major ways to know the trend of the market. There are two major ways to know the trend of the market: technical analysis and fundamental analysis. Those are the two major ways to know the trend of the market. Before you execute a trade, you must know the trend of the market. And the trend of the market, you can use the monthly time frame to know the trend for the month. You use the weekly time frame to know the trend for the week, and you use daily time frame to know the trend for the day. These are the best time frames to use in defining the trend of the market. Okay, these are the best three time frames to use in knowing the trend of the market. You either use the monthly to know the trend for the month, you use the weekly to know the trend for the week, and you use the daily to know the trend for the day. And after you have defined a trend for that week, you should know the risk. After you've defined a trend for the week, because it's one thing to know the trend of the week, it's another thing to know the right time and price to execute the trade. The right time and price to execute the trade. Okay, so you need to know your entry levels and exit levels. You should know this. Okay, know your entry levels, know your exit levels. Okay, then you need to define the risk on the trade and also the reward on that trade. So you need to know all these things before you execute a trade. Okay, so like I said, there are two major ways to define the trend of the market. You either use technical tools, technical indicators, which we refer to as technical analysis, or you make use of economic indicators, economic events to define the trend of the market, which we refer to as what? Fundamental analysis. Fundamental analysis, okay? So the first thing is to use the news calendar, check the calendar to know the various news that will be released from the different countries that you are planning to trade their currencies. Okay, so you need to check the calendar, and I make use of Forex Factory. That's the news calendar that I use. We have investing.com. You can also use investing.com. You have investing.com, but I prefer using um, Forex Factory. We have investing.com. You can also check for news events on this calendar. Okay, news, currencies. Okay, so I think it's here. Okay, so I work with I make use of uh, Forex Factory because it's easy to read and interpret. It's easy to read and interpret. So this week, these are the major news that will be released this week. You can see we have several major news that will be released from the United States. So tomorrow is Monday, and no major news will be released tomorrow, Monday. As you can see, there are no major news on Monday. And when there is no major news, most times volatility is low. when there is no major news, we expect low volatility in the market. Sometimes it is volatile, okay, but most times there is low volatility in the market. So it's either the price will range, okay, it's either price will range or there will just be a little movement, price movement in the market. There won't be much volatility. So if you are considering trading tomorrow, your profit target and your risk shouldn't be high, okay? The profit target and your risk should not be high, okay? You cannot be aiming for 100 pips, 100 pips on Mondays. You cannot be aiming for 100 pips as TP unless you are trading the weekly bias, weekly trend. If the trade is executed based on the weekly trend, you can aim for 100 pips. But if you are a day trader, you cannot be aiming for 100 pips on Monday. Maximum should be 60 pips. 60 pips maximum on Mondays. 60 pips. Then your risk can be between 25 and 30 pips. Okay, so tomorrow, no volatility is expected. On Tuesday, 13th, claimants count change will be released from Great Britain by 7 a.m. and by 1:30 p.m. core CPI, that is Consumer Price Index, will be released from the United States. And you can see the previous value and the forecast value. For core CPI, they are expecting an increase. You can see the previous is 0.1 and the forecast is 0.3. Then CPI MM, you have negative 0.1 as the previous, and the forecast is 0.3. And for CPI YY, you have the previous of a 2.4 and the forecast is 2.4. Okay, that is the forecast. Okay, so on CPI YY, they are not expecting any increase, but for core CPI and CPI AMM, they are expecting increase from negative to 0.3, from 0.1 to 0.3%. Then on Tuesday also, the Bank of England Governor Bailey would be speaking. He would be giving a speech by 4 p.m. Nigerian time. So we should expect high volatility on GBP pairs and USD pairs on Tuesday. We should expect high volatility on GBP pair and USD pairs on Tuesday. Okay. Then on Wednesday, Australia will be releasing its wage price index on Wednesday. So we should expect high volatility on Australian dollar pairs by 2:30 a.m. Nigerian time. The previous is 0.7% and the forecast is 0.8%. So they are expecting increase on the wage price index. Then on Thursday, we have Australian dollar employment change and unemployment rate will be released on Thursday. On Thursday also, Great Britain pounds will be releasing GDP, gross domestic product. And on that same Thursday, we are expecting several major news from the United States. So for the dollar pairs, I think Tuesday and Thursday will be the best time to consider trading the dollar pairs because there are several major news that will be released. So on Thursday, core PPI, that is production price index. Production price index will be released on Thursday. Core retail sales will be released from the United States. Then we have PPI here, that's production price index. Retail sales also will be released from the United States, unemployment claims, and by 1:40 p.m. Nigerian time, Fed Chair Powell speaks. Okay, so we should expect high volatility on USD pairs on Tuesday and on Thursday. If you are not a news trader or a fundamental trader, you could consider trading USD pairs on Monday and on Wednesday because there are no major news. Okay, there are no major news. You could consider trading them USD pairs on Monday, okay, and on Wednesday. But you want to ensure that you close your trades before this news is released. If you are a technical trader, okay, you want to ensure that you close those trades before the major news is released. I hope that is clear. Then on Friday, Prelim consumer sentiment will be released on Friday by 3 p.m. So this week we should expect high volatility on USD pairs and also GBP pairs. Okay, so that's it for the fundamentals. Let's go to the charts. So on here, we'll first look at DXY. I've always told you why we look at DXY dollar index. It's to know the strength of the dollar. If you're considering trading USD pairs, you want to know the strength of the dollar. It is very important. Okay, so start by looking at DXY, which is application for dollar index. Few minutes, guys. I think I'm using the wrong link. Oh, guys, few minutes, please. Uh, quickly Forex. Few minutes, guys. Few minutes, guys. Few minutes, guys. I need to post the correct link to the groups. Few minutes, guys. Few minutes. I posted the wrong link. Sorry, guys. I posted the wrong link. Okay, so this DXY. So we'll start with the weekly time frame. So, guys, I'd like to know what can you see on DXY? What's your take on DXY? Based on the pattern we have here, I'd like to know what do you see on DXY? What's your take on DXY? Are we bullish or bearish on DXY? Are we bullish or bearish on DXY? So what can I see on DXY? I see that here we had a fair value gap. We had a fair value gap here. We have a fair value gap here. Most likely DXY wants to fill that gap. Most likely DXY might fill this gap before going bearish. It might. But we need to also consider this breakout here. There was a breakout from this support. Okay, you see there was a breakout from this support. This support. Price has tested that support, and this could also be a break and retest. This could also be a break and retest, right? Okay, so after the close of last week candle, as you can see, DXY was bullish last week. Okay, it was bullish. Now, after the close of last week candle, I would like to see how the daily candle closed, last Friday candle. If it closed as a bearish reversal pattern, okay, I would be considering selling. If last Friday candle closed as a bearish reversal pattern, I would be looking for sells. Okay, so let's go down to daily. Let's go down to daily. So what do we have on daily? So you can see the pattern we have on daily. This is a spinning top. This is a spinning top, which indicates change in trend from bullish to bearish. Okay, it indicates change in trend from bullish to bearish. So with what I have on a daily time frame, I think DXY is set for sell. Okay, I think it is set for sell. DXY has created a resistance there. And for me to buy DXY, this resistance must be broken. If this resistance gets broken, then it's most likely DXY wants to fill this fair value gap. It's most likely DXY wants to fill this fair value gap if it breaks out from this resistance. But at the moment, DXY is bearish. DXY is bearish. So I will be looking for sells on DXY. Okay, I will be looking for sells for DXY. But if DXY breaks out from this resistance it's created on Friday, okay, this was the resistance for last week market. This was the resistance for last week market. Okay, we had the resistance here. Yeah, this was on Monday. Am I correct? 1, 2, 3, 4, 5. Okay, this was Monday. This was last week resistance. Price broke out from last week resistance. Can you see what we have here? Can you see what we have here? So we had the resistance last week. Price broke out from that resistance. And what happened on Friday? Price pulled back after the breakout. So this can also be a break and retest, which means DXY might continue going bullish. But like I said, before you jump in and start buying DXY or going bullish on DXY, you want to wait for price to break out from this resistance. But based on how last Friday candle closed, we should expect a bearish move on the dollar. Expect a bearish move on the dollar. Good evening, Mr. Atonda. Good evening, Mr. Joseph. William, good evening. I'm sorry, I think I dropped the wrong link. I dropped the wrong link. Okay, so that's my take on DXY. Price breakout from the resistance, look for buys to this level. Okay, look for buys to this level before you. Okay, then you can look for sells after it fills the fair value gap. Okay, I hope that is clear. Any question on DXY? If there's any pair you want me to analyze, please drop it in the comment section. If there's any pair you want me to analyze, drop it in the comment section. Drop it in the comment section. So that's my take on DXY. Okay, so next instrument we'll be looking at is the yen basket. Yen basket. Yen basket. That will be the next instrument we'll be looking at. Yen basket. Let's look at yen basket. If you have any question, any pair you want us to analyze, please let me know in the comment section. Okay, let's look at yen baskets. So let's start with the weekly. So last week candle closed doji, as you can see. So doji indicating change in trend from bearish to bullish. Also on yen basket, I think this fair value gap has been filled. Okay, this gap has been filled. So at the moment, the yen is bullish. Okay, it is bullish at the moment. But if a candle closes below the low of this fair value gap, the low of this fair value gap, then we should expect more bearish move on yen. Okay, but at the moment it is bullish. Fair value gap has been filled. Okay, and you have what we call IOFED, institutional order flow entry trail. You can see it. You can see when you have a previous low or high in between a fair value gap, that is an IOFED. Okay, so it's closed as a daily. Let's go down to daily. Let's see what we have on the daily. Okay, so this is what we have the daily time frame. So last Friday candle closed as a bullish, and we had the support here. We had a support at this point. Price broke out from that support, and there was a pullback. Okay, and the market closed above this support zone on Friday. The market closed above this support zone on Friday. You can see it was also a support at this point. Can you see that? So the market closed above it. This tells me that yen is bullish at the moment. Okay, yen is bullish at the moment. But if this support gets broken, if price closes below this support, then we should expect more bearish move on yen. Okay, yen might come to clear the liquidity residing at this relative equal low if it breaks out from this support. Okay, if it breaks out from this support, but at the moment, my bias on yen is bullish. It is bullish. Yen might pull back to fail. Let's go down to 4 hour. Yen might want to pull back to fill this fair value gap. It might want to come fill this fair value gap. If you apply your Fibonacci from this swing low to this swing high, you can see price pulled back to a discount area, pulled back to a discount area. And if you work with this most recent range, this range, if you apply your Fibonacci from this swing high to this swing low, we want to see price pull back to a premium area. Okay, and at the premium area, we have a fair value gap here. Okay, so it is likely going to come fill the fair value gap. So the best time to consider going bullish is after price breaks out from this resistance it's created. If a 4 hour candle closes above this resistance, that would be the right time to consider buying the yen. I hope that is clear. That is what I see on the yen basket. Okay, go bearish if this support is broken. Go bullish if price breaks out from this resistance. That is what I see on the yen basket. I hope that is clear. So let's look at GBP USD, Euro USD. So last Friday, I was my bias for Euro for GBP USD was buy. That was my plan. I was looking for buys on GBP USD, but I missed the move. I missed this first move because I was expecting price to pull back to fill this fair value gap. That was my expectation. But price did pull back. Price did pull back. I was expecting it to pull back to this fair value gap before going bullish. And that's still my expectation for this week. That is still my expectation for this week. I want to see price pull back to this fair value gap before going bullish on GBP USD. So with what we have here on the 4-hour time frame, I could look for sales tomorrow on GBP USD. I could look for sales, but let's start with the weekly. Let's start with the weekly. Okay, so on the weekly time frame, last week was bullish. Congrats to those who bought. I'm sure you made a lot of money from that trade. So this is an area of liquidity. Okay, so it closed bullish. This tells me that GBP USD is bullish. Why? You can see it respected the low of this candle. The low of this candle. You can see this was the first shooting star. Then the 2 weeks ago we had a shooting star, but the shooting star respected the low of this candle, and last week candle also tested that low, and there was a strong rejection from that low. That is the reason my bias for GBP USD this week remains bullish. This low has been respected 2 times. This low has been respected 2 times. Last week respected it, 2 weeks also. 2 weeks ago, that level was respected. I would only consider selling GU if price breaks out from this low. If price disrespects this low, that is when I will consider going bearish on GBP USD. But at the moment, based on what we have on the weekly, the pattern on the weekly, and also the pattern on the daily, let's see. So you can see what we have on a daily. Okay, last Friday candle closed strongly bullish, strongly bullish. Okay, so based on what we have here, I think GBP USD might come to play the liquidity residing at this relative equal high. That is what I think is going to play out on GU. And if you look at what we have here on the daily time frame, you can see price was in a range, right? Price was in a range from this point to this point. And what played out here, I think last week they had to come and clear the liquidity residing at this previous low. And I think the next move would be to go and clear the liquidity, the buy side liquidity. That is what I see playing out on GU this week. Okay, so we have support here. I would only consider selling if this support is broken. But at the moment, my bias is bullish. Okay, my weekly bias is bullish on the dollar. Technically, GBP USD should be bullish this week. GBP USD should be bullish this week, technically. Okay, but as you know, we have several major news that will be released from the United States. CPI, the high impact news. The institutions are waiting for that news to be released. Most retail traders are also waiting for that news to be released, and that could influence price action. Okay, that could influence price action. So let's look at EU. If you have any question on any of these instruments, let me know. If you have a contra review, let me know in the comment section. If you have a contra review, let me know in the comment section. So EU, you can see the market has opened for the week, and there was a little gap on EU. There was a little gap on EU. So you can see, let's start with the weekly. So last week, EU was bearish, right? And we say there was an indecision on EU last week. You can see the pattern we have there looks like a spinning bottom. And also you can see we had probably this gap was to just come test this support. I think that is what, I think this gap, I think the plan is to fill this fair value gap, I think. So price is likely going to contest this fair value gap. That's what I see playing out on EU. Okay, they're going to test this fair value gap, fill this fair value gap, and after this fair value gap gets filled, you should look for buy setup on EU. So I believe they know a lot of retail traders. Many retail traders would have executed buy after the formation of this pattern that looks like a spinning top. They know a lot of, you can see on the daily time frame, after the formation of this spinning bottom, they know a lot of retail traders would have executed buy. Okay, they know a lot of retail traders have executed by where would they have their stop losses? Stop losses will be residing at this low. So the first thing they did was to clear the liquidity. That liquidity has been cleared, and after the formation of this candle, a lot of retail traders will also jump into start buying, and I think they will need to clear their liquidity, the stop losses. So on the daily, you can see the fair value gap here. So this would be a very good area to consider looking for buys on Euro USD. They will stick some liquidity on Euro USD. Okay, and you want to wait for price to create the low for the week or low for the day. And as you can see, the low has not been created. Then see low has not been created. So you need to wait for a low to be created before you look for buys on Euro USD. I hope that is clear. I hope that is clear. So my bias on Euro USD also is buy. Is buy. Okay, it is buy. Let's see for our okay. So that is what I see playing out on. So you can see what we had there on EU. You can see what we had there. I think this bearish move was to play the liquidity residing at this previous low. That's what I think played out on Euro USD. Okay, they've cleared the liquidity, and we have a tiny fair value gap here. That fair value gap has been filled, and you can see the pattern we had on 4-hour time frame. You can see the pattern we had on 4-hour time frame. You can see we had an hammer here, then we had an engulfing pattern here. I was expecting price to pull back, okay, fill this fair value gap, and pull back from that fair value gap. That was my expectation last Friday. That was my expectation last Friday, but price did come to fill this fair value gap, and you can see the market has opened and it gapped out from that fair value gap. You can see it's opened below that fair value gap. And like I said, I think that move was to clear the liquidity residing at this previous low. That they have achieved. So I'll be looking for buy setup on EU. I'll be looking for buy setup on EU. But first, it needs to create a low. It needs to create a low. It needs to create a low. So this is where I will be considering buying. We have a fair value gap here also on the 4-hour time frame. So these are the areas I will be considering buying. This is where I will be considering buying Euro USD. Are you guys still here? Are you still here? Are you still here? Can you hear me? Are you guys still here? Give the video a thumbs up if you haven't done that. Give it a thumbs up. Give it a thumbs up so that others can get to see the video. We have close to 10 persons in this class. Give it a thumbs up. Give it a thumbs up. And if it's your first time participating on the live stream, please subscribe to the channel so that anytime I come on live, you get notified by YouTube. You don't want to miss the classes. You don't want to miss any of the classes. So do subscribe to the channel. Do subscribe. Give it a thumbs up, please. Give it a thumbs up. Okay. Is there any other pair you want us to look at? Is there any other pair? Let me know in the comment section. Okay. So before we end the class, I will talk about correlation, currency pairs correlation. I need to talk about it because I see a lot of you, approaching the markets the wrong way. You're doing the wrong thing in the markets. You're doing the wrong thing in the market. Most of you don't understand correlation. I see no reason why you will be buying Euro USD and at the same time you'll be selling Euro USD. It just shows that you don't understand currency correlation. It just shows that you don't understand currency correlation. Okay? Yes, Baba. I'm in the class. Go and meet mommy. Go and meet mommy. I'm in the class. Please attend to him. Okay, so that's my take on Euro USD. Okay, that's my take on Euro USD. Okay, Mr. Joseph requests that we look at GJ. GBP, JPY. If there's any pair you want me to analyze, let me know in the comment section. Don't send me a DM after the class. Don't send me a DM. Let me know what pair you want me to analyze. I will not respond to your DM. If you are not a VIP student, if you are not my private student, I will not attend to your DM. Don't send me DM. Ask your questions while you are in this class. Ask your questions. If there's any pair you want me to analyze, let me know in the comment section. Let me know. Okay. GBP JPY. Let's start with the weekly time frame. So GBP JPY has been strongly bullish for several weeks now. For over a month, GBP JPY has been bullish. It's been bullish. And you can see the market opened with a gap 19331 to 19395. That's about 65 pips, close to 60 pips difference. Close to 60 pips. Okay, so if we apply Fibonacci from this swing high to this swing low, I think GBP JPY is at a premium area now. It will not be wise, as far as I'm concerned, it will not be wise to buy GBP JPY at the current market price. If you have not bought from this point, you didn't buy last week, you didn't buy 2 weeks ago, I don't think it will be wise to buy. Even if price will keep going up from this point, it will not be wise to take a buy trade from the current market price. Okay, if you want to buy, you should wait for a retracement. You should wait for a retracement before you buy. You should wait for a retracement before you buy. Okay. So let's go down to lower time frame daily. Let's see if a fair value gap was created after this engulfing pattern. Okay, so on a daily time frame, you can see we had a fair value gap here. We had a fair value gap here. So what played out here? Let's see. We had a fair value gap here. This is the daily time frame, and I think we had a shift in market structure at this point. There was a shift in market structure. Okay, there was a shift in market structure from this point, and you can see price had to pull back to fill the fair value gap that was created. Can you see that? So that fair value gap has been filled, and I think price is expected to pull back from that zone. And there was retracement last week, right? Yeah, there was retracement last week after price filled that fair value gap, and it created an high here, right? It's created an high here, which is an area of liquidity, and I think this breakout was to come clear the liquidity. They know a lot of retail traders would have exited after the formation of this timing. So, and this is one thing I've observed, I've noticed. When a fair value gap, when price fills a fair value gap, the high that it will create after it fills that fair value gap is an area of liquidity. And oftentimes, price will pull back to go and clear that liquidity before it continue in that direction. Hope you guys are getting what I'm trying to communicate. Are you guys getting me? I've noticed that when a fair value gap is created, after price fills that fair value gap, the high or the low is used as liquidity. And that is what has played out here. They know a lot of retail traders have executed sell, and their stop losses will be residing at this high. And that they have played. If a bearish reversal pattern forms on daily or 4-hour time frame, you should sell. You should sell. You can do a back test on what I just shared with you guys. Do a back test. You will see that most times after a fair value gap has been filled, the high or the low that it created will be used as liquidity. Do a back test on this. Do a back test on this. And most times price will pull back to clear that liquidity before it continues. So like I said, my bias on JPY is bullish. So I expect GBP JPY to sell. That's my expectation on GBP/JPY. It has created a fair value gap here, so I would expect it to come fill this fair value gap. That's my take on GBP/JPY. I will look for sales. Yes, it might buy before the week ends, but I want to see GBP/JPY retrace. There should be a retracement, and we have a fair value gap here. It has created, which I think is at a discount area. Or if we go down to 4 hour, let's go after the formation of this pattern. Let's go down to 4 hour. So you can see we had a fair value gap here. So GJ might come. This will be the first target. The low here will be the first target for GJ. This liquidity residing at this low, okay, will be the first target for GJ, and it might drop to this. We also have a fair value gap here. Okay, so that's what I see playing out on GJ this week. That is what I see playing out on GJ this week. I hope that is clear, Mr. Joseph. Okay, William, you have a contrary view. I think DSY is very bullish now. Okay, okay, you might be right. Okay, but before DXY would go bullish, it will retrace. Okay, it will retrace. It will retrace. That is what I say on GBP. You might be correct. We'll have a Zoom session tomorrow. Okay, we'll have a Zoom session tomorrow. So I'd like to know why you have a contrary view. Okay, you might be saying, well, I'm not seeing on the chart. So tomorrow by 10 a.m., I would like you to join the Zoom session. Okay, I'll drop the link on the VIP group. Okay, we'll have a Zoom session tomorrow so that you can share. Or after this class, I might have a Zoom session with you, Mr. William, and others on the VIP group. Okay, I'd like to know why you think it is still bullish. But we'll look at DXY again. Okay, we'll look at it again before we end the session. Okay, so Mr. Major is requesting for Australian dollar USD. Okay. No, we've not analyzed gold, Mr. Ebenezer. We'll do that before the class ends, okay? We'll do that. So Mr. Mayor is requesting for Australian dollar USD. Let's look at Australian dollar USD. Australian dollar USD. Australian dollar USD. Australian dollar USD. Let's start with the weekly time frame. So last week closed as a spinning top on Australian dollar USD. Okay, it closed as a spinning top. It closed as a spinning top, which indicates change in trend from bullish to bearish. Now, after the close of that spinning top, now on the weekly time frame, you can see that this low was respected on the weekly time frame. The low of the previous week was respected. Okay, the low of the previous week was respected, and if you go back here, also we had resistance. Okay, we also had a resistance here. You can see, so price came back, tested this resistance area last week, and there was a strong rejection from that level. Okay, so let's go down to daily. Let's see the pattern we had on a daily time frame. Okay, so you can see after price tested this support area, what pattern formed on the daily time frame? Okay, what pattern is this? Should we call this an hammer or a spinning bottom? This is a bullish reversal pattern on the daily time frame. This is a bullish reversal pattern. If you can't see it clearly on a daily time frame, go down to 4 hour. I'm sure a bullish reversal pattern formed on 4 hour time frame. So you can see it clearly on 4 hour time frame. What do we have here? This is an hammer, right? After the formation of this bearish candlestick, we had this hammer, right? This is a buy setup. This is a buy setup on the 4 hour time frame. If you go back here, you would see what played out here. We had a fair value gap here. Can you see this fair value gap? Can you see this fair value gap? Price pulled back, and you might be wondering why price still penetrated. We have an order block here also. That could also be the reason price penetrated, broke out from this fair value gap on 4 hour. That could also be the reason we have another block here. But let's still go down to lower time frame. It could also be we had a fair value gap below on the 1 hour or 15 minutes time frame. Let's see. So you can see on 1 hour, this is the fair value gap on 1 hour time frame. Yeah, that's the fair value gap on 1 hour time frame. Let's check 15 minutes. Let's see 15 minutes. Okay, so you can see what we have here. Okay, 15 minutes is the same. Okay, same fair value gap. Okay, so it could be the breakout from that fair value gap could be the other block we have on the 4 hour time frame. Okay, could be the other block. That could be the reason for that penetration, that breakout from that fair value gap. Okay, so with what we have here on Australian dollar USD, my bias is buy on Australian dollar USD. My bias remains bullish on Australian dollar USD. Let me go back to the daily. Let me go. Let's see the weekly. So, okay, so I think this high of last week might be used as liquidity this week. The high of last week. So this week, price will move in. We either go for the liquidity residing at this previous high or go for the liquidity residing at this previous low. That's what is going to play out this week. Price will either go up to clear the liquidity residing at this previous high or it's going to come for this low. If you're looking for sales, you are aiming for this low. If you're looking for buys, your TP should be at this high. That's what I see playing out on Australian dollar USD. My bias is buy on euro, on Australian dollar USD, and my TP, this will be my target for the week on Australian dollar USD. Technically, I expect Australian dollar USD to be bullish this week. Okay, I expect it to be bullish this week, but as you know, this week is CPI week. This week is CPI week. Okay, but technically, I expect Australian dollar USD to be bullish. I expect it to be bullish this week. I hope that is clear, Mr. Mayor. Mr. Mayor, that's my take on Australian dollar USD. I'm looking for buys. Okay, it has created a support here on the daily time frame. So if you are considering selling, you want to wait for price to break out from that support. You can't sell until this support is broken. That's what I see. I might be wrong. Okay, I might be wrong, but that's what I see playing out on Australian dollar USD. If I want to sell Australian dollar USD, if you apply your Fibonacci from this swing high to this swing low, what played out here, you can see, yeah, good. On 4 hour, you can see the shift in market structure. First, liquidity residing at this previous high was cleared, right? Liquidity residing at this previous high was cleared. And what happened? Shift in market structure occurred at this point on the 4 hour time frame. Okay, so price is expected to pull back to a premium area. Okay, price is expected to pull back to a premium area before going bearish. So if I want to sell Australian dollar USD, like I said, you can see, I think this high here was used to fill a fair value gap, and this high now is an area of liquidity. Okay, let me confirm that. I want to confirm this high was used to fill a fair value gap. Let's see. Let me go down to lower time frame. Let me confirm that. Let me confirm that. Minutes. So let me go to 15 minutes. Okay, so on 15 minutes, we had the fair value gap here. Okay, so you can see what we had here. We had a fair value gap here, and this was used to fill that fair value gap, and this high becomes an area of liquidity. Has price tapped into this area? Has it been cleared? No. Okay, so these are the areas. If I want to take a sell, I want to see price come fill or clear the liquidity residing at these highs. That is where I will be considering going bearish on Australian dollar USD. But as it is now at the moment, it is bullish. It is bullish. But before I will take a buy trade on Australian dollar USD, I want to see price pull back. Like I told you guys, this low we had here, this low we had at this point, I think it was used to come fill a fair value gap that was created at this point. Let's just confirm on 1 hour. So you can see on 1 hour, we had, I think there was a fair value gap here on 1 hour. I believe you can see this fair value gap. This fair value gap, I believe you can see that, this fair value gap. So this was used to come and fill this fair value gap. And this low, this is what I just shared with you guys. This low has become an area of liquidity because there are a lot of orders that were executed after this candlestick pattern formed. You can see there were a lot of orders that was executed here. This was an impulse move, as you can see. So a lot of orders were executed after the formation of this pattern. And there are a lot of stop losses, a lot of sell orders residing at this low. There are a lot of sell orders. So there's a high probability they will come and clear the liquidity residing at this low. That's my expectation on Australian dollar USD. And this is where I will be considering buying Australian dollar USD. I want to see price clear the liquidity residing at this previous low before going bullish on Australian dollar USD. And I'm going to aim for this high as my area, my TP. This will be my target. Okay, so that's my take. Which other instrument do you want us to look at? Let me know in the comment section. Which other instrument? Okay, someone requested for gold. Gold. Okay, gold. Let's start with the weekly time frame. So you can see last week was bullish. Last week was bullish. You can see we had equal low here. You can see we had equal low here. So price has been respecting this low. As this kind is like 4 weeks ago, right? Yeah, 4 weeks ago, we had a low here, a shooting star formed, and previous week candle tested that level. There's a strong rejection from that level, and gold was strongly bullish last week. It was strongly bullish last week. So let's go down to lower time frame. After the formation of this candle, let me see the pattern it formed on a daily time frame. It should be bullish reversal pattern, as you can see. It's a bullish reversal pattern. The last candle for that week closed as a spinning bottom, which indicates change in trend from bearish to bullish. And you can see last week, gold, when the market opened, gold started buying. You can see. So price pulled back. Then you can see what I'm saying here. Price pulled back. We had a resistance here, which became a support. And we also had a fair value gap here. Price pulled back last week, filled the fair value gap. And you see that? It filled the fair value gap and it created a new fair value gap here. You can see it created a new fair value gap and price pulled back again, right? Price pulled back. Let's see. Yeah, it's created a fair value gap here. And you can see price have pulled back to fill that fair value gap. And you can see the pattern it formed, a spinning bottom. This tells me gold is bullish. This tells me gold is bullish. Gold is likely going to come clear the liquidity residing at this high. Gold is bullish. Gold is bullish. Any sells on gold would be a retracement. Any sells on gold would be a retracement. to be a retracement. That's what I see on gold. Gold is bullish. Gold is bullish. That is what I see on gold. Gold is bullish. Okay, this is 4 hour time frame. Let's see if it's created a fair value gap here that needs to be filled. Let's see 1 hour. Let's see if it's created a fair value gap. Uh, no fair value gap here. Okay, no fair value gap. Let's see 15 minutes. Let's see 15 minutes. Okay, so we have a fair value gap here on 15 minutes. So gold might want to come. It might. Okay, it might come fill this fair value gap. So it's either it comes to fill this fair value gap or it breaks out from the resistance for continuation. Okay, it's either going to pull back to fill the fair value gap or it breaks out from the resistance it's created on the 4 hour time frame. Okay, so you either look for buys at this area or buys above the resistance level. That's what I see playing out on gold. Look for buys to a breakout from the resistance or a retracement to this zone, this fair value gap. That is my take on gold. That is my take on gold. Okay, that's my take on gold. So, like I said, I want to talk about correlation, currency pair correlation. Currency pair correlation. Euro USD. We have two types of correlation. We have uh, Euro USD. We have the positive correlation and we have negative correlation. Euro USD, GBP USD, NZD USD, NZD USD, and Australian dollar USD. These pairs are positively correlated. They are positively correlated. 70% of the time, these pairs will move in the same direction. Reason being that the dollar is the counter or quote currency on all these pairs. So it would be wrong for you to be buying Euro USD and at the same time you are selling GBP USD. It would be wrong for you to be buying Euro USD and at the same time you are selling USD. Okay, to be wrong, and most brokers even will not welcome that. They see that as edging. So if you keep trading like that, because I understand that okay, if you take a buy on Euro USD and you take a sell on GBP USD, one has a high probability of playing out. One is likely going to hit TP, while the other will hit stop loss. And if you apply good risk and money management, let's say you're trading risk reward 1 to 2. Let's say you apply risk reward 1 to 2 on the trades. If you lose one, let's say you lose Euro USD, you lose $1, and you win GBP USD, you make $2. At the end of the day, you close or you end those trades in profits. But most brokers will not accommodate that. They will not welcome that strategy, that hedging strategy. They will not welcome it. They will not welcome it. Okay. So these four pairs are positively correlated, and you don't have to trade everything. You can just pick one or two. Pick one or two from these pairs and just focus on that. Instead of trading all the pairs. For example, you could analyze Euro USD, GBP USD, NZD USD, Australian dollar USD. You could analyze it for tomorrow market and look for the one that has a good setup and just trade that. You don't have to trade everything. You'll be taking too much risk trading all the pairs. Just focus on one. Risk everything. Risk the daily drawdown. Risk it on one of the pairs instead of trading everything. You'll be stressing yourself trading all the pairs. Especially those of you that are new to trading, just focus on one or two pairs. Understand the correlation between the pairs, positive, negative. Okay, so these four pairs are positively correlated. And also, I think gold also is positively correlated with these pairs. If Euro USD is buying, there's a high probability gold will be bullish. Also, if GBP USD is buying, there's a high probability gold will be bullish because the USD on gold also, the USD is still the counter currency on gold. Then you have USD JPY. Sometimes USD JPY just does its own thing, but it's supposed to be positively correlated with USD CHF and USD CAD. Sometimes USD JPY does its own thing. Okay, it goes in the opposite direction with this, with USD CHF and USD CAD, and that's because the yen is a safe haven currency. It's a safe haven currency. So sometimes it does the opposite of USD CHF and USD CAD. But in a normal market condition, these pairs are supposed to be positively correlated. Okay, if you see them moving in opposite direction, it means there is a news or a fundamental or an economic event that is influencing that price movement. If you see any of these pairs trading in the opposite direction, it's either there's manipulation in the market or there's an economic event that is influencing the price action. Okay, so these three pairs are positively correlated. Then these ones are positively correlated. And as you can see on these pairs, we have USD as the base. Okay, we have USD as the base. And on these pairs, we have USD as the counter. So if these pairs are bullish, these ones will be bearish. So the correlation between these pairs I listed above here and these ones is negative. It is negative. So you cannot be buying Euro USD and buying USD card. You cannot buy Euro USD and at the same time you are buying USD card. If you see a buy setup on Euro USD, then you should expect there's a high probability USD card will be bearish, USD CHF will be bearish, USD JPY will be bearish. A lot of you make that mistake, and that's because you don't understand correlation. A lot of you make that mistake. Please do a study on correlation. Okay, do a study on correlation. Go on Google, do a search. Just search for currency correlation or intermarket correlation. You can also check for intermarket correlation to know the relationship between the crude oil and dollar. Okay, go on Google. All the information you need, you will have them on Google. On YouTube also, if you prefer video, go on YouTube. Okay. Any question? Any question? Any question? Any question? Do you have any question? That will be all for tonight's session. If there are no questions, do you have any question? So, Mr. William, we'll meet tomorrow. I'd like to know your opinion on DXY. Okay, let's look at DXY before we end the session. I said we'll look at it again. Let me see if there's something I'm not seeing that you are seeing on DXY. Let's just look at DXY again before we end the session. Okay, so DXY, let me start with it. Let me just look at the monthly. Let's look at the monthly. Okay, so on the monthly, what do we have here? Price came on the monthly. So what do I see on the monthly time frame? I think what we have here is accumulation. Okay, accumulation distribution. You can see price has pulled back to fill this fair value gap. You can see this. Price has pulled back to fill this fair value gap. Okay, that's cleared the buy side liquidity. You can see that's cleared the buy side liquidity, cleared sell side liquidity, and we had a resistance, yeah, support on resistance. Last week, price tested, you can see that resistance, and there's a rejection from that resistance. Okay, so Um, that's what I see on the monthly. There's a rejection from this resistance or support zone resistance. So I think G dollar might, come test this breaker, might come test this breaker. Okay, I might be wrong, but based on what I see on the monthly time frame, okay, I think the dollar is bearish. It is bearish. Okay, same on the weekly. Price came back, tested this support zone, resistance zone, rejection from that. Okay, so if dollar will still go up, maybe just to come and fill this fair value gap. Okay, maybe to just come fill this fair value gap and also clear the liquidity that it's created last week. That's what I think might just play out on. Okay, so it might just pull back to clear the liquidity residing at this previous high, last week high. Okay, so it might just complete the liquidity and maybe fill this fair value gap. Okay, so that's what I see. My bias still remains bearish on dollar index. Okay, so that will be all for tonight's session. I want to appreciate you all for your participation. I hope you got value from the session. I hope you got value from the session. Our next class will be on Tuesday. Tuesday by I think 9:30 p.m. Tuesday. I want us to be having the daily market outlook session in the evening. I think the attendance in the evening session is high compared to the morning session. I guess a lot of you are busy at work during the day and can't attend the morning session. So I think the evening session is more convenient for you guys. I believe the evening session is more convenient for you guys. So we'll be meeting by Wednesday, Wednesday. And I'll be dropping signals on Tuesday. That Tuesday evening, I'll drop a signal. Wednesday also, I'll drop a signal on GU and EU. So you don't want to miss that class. Please give the video a thumbs up if you haven't done that. If this is your first time joining the live stream, subscribe to the channel so that anytime I come on live, you get notified by YouTube. Once again, I want to say a big thank you to every one of you, and I wish you all a profitable trading week and a wonderful night.